September 6th, Tuesday. Monday was a holiday, Labor Day, so there was no markets yesterday. This is Market Analysis with Stan Ehrlich. Today we're going to cover stock market indexes as usual, giving you an overview of what to expect, I hope, from the markets in the days, weeks, and even longer months to come. We're going to look at some of the Ehrlich reversal signals, and we're going to look at some cycles. Okay, here we go. The S&P 500 is the favorite chart, the one I use on a constant basis, showing you the daily data. We're actually at the moment higher on the day, and it is 7:55 in the morning in California, and it's already kind of hot. So it's almost 8 o'clock. We have slightly higher on the day. Markets opened slightly higher, not a heck of a lot, a little less than a point, maybe a little over a point. Came up slightly, and then all of a sudden the bottom dropped out. We have made new lows for the trend. Today's low is the lowest prices we've seen since July 20th. So far, a variety of support levels the market has tried and successfully bounced off of last Thursday and last Friday, although the close was dangerously close to its lows and making new lows. It didn't quite. And you'll also notice there's a bull trend line from the bottom of the market on June 17th, which was the head of a head and shoulder bottom, or inverted head and shoulder, some people call them. I'll just say head and shoulder bottom instead of a head and shoulder top, which worked very, very nicely. Minimum upside objective 430, top of the market on the rally 431 3/4 for only a fraction of a day, and right back down since then to where we are, a new low for the move down, well over 50% since the bottom of the market, and momentarily up on the day 68 pennies, 68 cents, not even a full point. So it's rebounded pretty nicely after new lows and washing out sell stops. I'm modestly impressed. If this market can close on a strong note, at least where it is right now, if not significantly higher, making obviously new highs for the day, we have a chance that this low, which is in oversold territory for now 5 days, it would have been 6 if yesterday was a trading day and it wasn't, 5 days in a row in oversold territory, implying that we're building in some way, shape, or form a bottom. Now this reversal, which is now up 87 cents and about where it opened, could do the job. I thought that last Thursday was going to be it. Nope, didn't work. Okay, Friday, but today it made a lower low. So I'm still looking for a rally up to about 407, give or take a couple of points. Friday's rally early in the day was 401 and a half, getting pretty close, but then all of a sudden everything fell apart. So we're bouncing back very, very nicely. We'll look at some other charts that could corroborate a move up for a short period of time, and we'll see how far that rally can get. I think it's only going to get to 405, 6, 7, 8, 9, something a little bit below 410. Let's look for a moment at the DIA, the diamond daily data chart. New lows again for the whole move down since the top we had in the middle of August 16th. Again, oversold around where it opened, a little higher on the day, up 86 cents. Nothing significant yet. If we were to keep rallying, I would be fairly impressed. Right now, maybe, not quite, not really quite good enough. Next chart, let's look at the QQQs, and I'll cover the major indexes except for the 2000 we'll take a glance at. The Qs, the Ehrlich reversal gave us a sell signal smack on top of the market on August 16th. That's why that daily bar is red. That's a system I've developed over decades. We have a decent sell signal here. It didn't last very long, made a little money, not too much. This is a whopper. This is great. Buy signal, it was bad, didn't work, lost a little money. Buy signal, which is green. Buy is green, red is sell. Come on. Worked pretty good, few days, and rallied up very strongly. I'm not going to go into it that much at the moment on the Ehrlich reversal signals. And there we have the daily data discussion for the major indexes, except for our Russell 2000, which I like to include. Again, like all the others, new lows for the move down for several weeks, and since the high in the middle of last month. By the way, I think I'm going to mention it right now. There is the possibility that oops, I did something wrong. I'll just ignore that for the moment. I'm going to go back to the S&P. There is a possibility that we have a very large, and I hesitate to say this so early in the game, head and shoulder bottom. What if this was a shoulder back here in February? And it's kind of a double shoulder. Two lows, two or three. And this one might be part of the pattern as well. It's very early in the game, so I really don't want to stress this too much. The neckline would be the bear trend line that we touched, and it stopped the market in the middle of last month perfectly. One of 7 different reasons why I got bearish and got short and recommended shorts, etc. on that exact date, August 16th. Let alone the fact that my trading system automated 100% got short. What if this is the beginning of a shoulder and we're actually going to go sideways mostly in the next few weeks? Gee, that's going to pop us into, guess what, October. A little cyclical research here. October is the month of the year when the market loves to bottom out. Somewhere in the 80 to low 90% of the time in the last 30 plus years, we have had a low so close to or in October exactly. The little arrows point to the weekly data low, which of course we haven't had yet. It's a month away. But last year it was within this green bar, which is the October time frame, just a hair early or at the very end of the month the previous year. That's good, early but still good. That's good, a little late but good. There wasn't a low to even see in 2017, but if you bought it during October, you would have made money. There's a low that's slightly late. There's a low that's slightly early. That's right on time. That's right on time. And I'll just slide backwards real quick to let you look at a few others. That's a tiny bit late. The new one coming up is a tiny bit early. That worked, but it wasn't a low. That's great. That's great. And this is the subprime low crash. We had an October low. Didn't last very long. Then I think that is November 21st. And then obviously it was February, I believe, of the next year, March 6th, that week. So there are many other lows I could show you covering 3 decades plus for this particular cycle low. Don't forget, I won't let you, that the month of October is going to hold probably a low of major significance. Going back to this possible shoulder low thing, what happens if crude oil starts to make a new low for the trend? We are very, very close. In fact, today it rallied to a new high for a couple of days, and then it simply gave up the ghost and is around unchanged right now, up just barely. So all it has to do is drop down a little bit more, and we're going to start to hit some sell stops, and there might be a lot of them. This is the support line, new lows for quite a long time if we break that line, and that's the lowest low since March 15th of this year. And that low would be 83.20, currently 86.82. So petroleum prices going down would help the market go up some, I would think. Also, keep doing that, wrong thing. And bonds, interest rate futures, are rising because this is going down. But we were oversold on Thursday and Friday, and although we have a new low here, maybe it'll come back. We're having the potentials of a double bottom, but it hasn't happened yet. We've got the support down here, 103.5-ish, 130 I meant, and a half-ish, a couple of points lower. So let's see what happens with interest rates if this turns back up. Otherwise, going down means higher rates. Higher rates the market does not like. So, at least at this point. Some did it again. Corroborating information. Going back to my indexes real quick. I do think there's a chance this market could turn around today, but I need more strength. Opened, had a high, all the way down. By the way, this is one of the smallest head and shoulder bottoms I've seen in quite a while. This is a 1 minute chart, people. The head and shoulder bottom is right here. Shoulder low and a bullish engulfing 1 minute. The head of the formation. And symmetrically, it's almost exactly the same amount of time to the last low as it was from the first low to the head. Just a hair lopsided, but that's just fine. Not too much so. Slightly downward slanted neckline, just fine. Broke out, rallied sharply, just fine. But what's interesting here is this pattern is only 30 minutes or so in size. Extremely small. But they come in all sizes. I once saw a head and shoulder that lasted, it took 10 years to form, and a few years to have the bull move, which it did. I think it was in the dollar index way back a few decades ago. So this pattern produced a rally much, much bigger than the minimum upside objective, which is measured from the lowest low of the head right here to where the neckline is crossed on the same vertical bar. So you take that distance and you measure from the breakout point straight up. And it took it like 3 or 4 minutes to get up to the minimum upside objective, which is right in here approximately. But these are minimum upside objectives, I just said, and it can go farther, which this has done already, rallied up quite a bit more. Now presenting the possibility of something more significant, a turning point of significance. Okay, so let's take a quick look at a variety of futures here. Started in the industry in '71 in the futures industry. Was a futures broker about 35 years. It's my first love, futures. We're short hogs, bearish engulfing almost on the high day. Coming down pretty good. 8 and a fraction dollar profit. Looking good so far. New low for the trend this morning. Slightly higher in the day momentarily. Trailing stop coming down. No problems with this. Had a profitable trade back in here because of bullish engulfings. We didn't catch this trade. It was a bearish engulfing, but it was a signal to go short if you wanted to, but not the automated system. Didn't catch it, but the signal was good. Next chart. Oh, hey, we're looking at 10-year notes. Also, on the top of the rally, bearish engulfing, ERSignal combination, got short 2 days later. We're still in the trade. New low for the move down. No problems there whatsoever. I think we're going to be getting out of this pretty soon. I told you why a few minutes ago. Oversold conditions for a week and a half. Almost every day. Not quite. So I think we're about to turn back up again in their interest rates. Next chart. Nothing here on bean oil at the moment, but we did catch the bottom on the ERSignals back here on December 15th for a huge rally. Nothing particularly interesting at the moment on oats. And flying through these real quick, wheat, no. Here is the coffee market. We have a cycle high that's working. Also, the previous cycle high worked great, and the previous one was just a hair early. Even the cycle lows here have hit fairly accurately. It's still going to be quite a while, 79 days, until we have the next cycle low time frame appearing. So 80, a few months. Now, no signals except on top of this rally right there, but the cycle's working very nicely. And we did get overbought. There are some reasons to go short if you were inclined to do so, and I would have been. ER's trading system did not catch the trade, so I don't have a red bearish engulfing as we did here on the top of this rally. Next chart. I know what's happening here. Little bug in the system. I think I'm going to drop off here except for a couple of more real quick Eurodollar below par, now at 98.6, so to speak. This is the lowest in many years. I think it's going to go lower still. I don't have much of a handle at the moment on how much lower, but it could be significant. It has been below 90 before, or 0.9 I should say, which would be a 10% discount if you went to Europe and bought the same item for the same theoretical price as in the United States. I'm very much interested in and learning and about to use NinjaTrader for my charts, probably this week, converting back and forth from TradeStation to Ninja Charts. Ninja Charts has a variety of features that are great. So I'll be flipping over to NinjaTrader very soon. Also, I want to mention the foundation for the study of cycles. I invented the Ehrlich Cycle Finder in 1977. I've been interested in using, in a variety of ways, cyclicality or cycles, cycle movement in markets for over 40 years. Thank you very much. Stan Ehrlich, signing off.